everybody. Dr. Richard Smith here with the Foundation for the Study of Cycles and Cycles TV. Good to be with you today. What is it? Unbelievably, we're more than halfway through the month of May. It's May the 20th, and good to be with you all again today. So psyched for our conference that's coming up in just a few weeks now. If you are on the sidelines at all, if you're thinking about it at all, you gotta be there. This is not going to be like any conference that you've ever been to before. I promise you that. It's going to be really interesting. We're going to be doing things that I've never seen done at a conference before. And of course, we're going to have the greatest minds in cycles all together in one place, in person, having private conversations. Some of the things we'll share publicly, but a lot of it is, people being there together, sharing their best and sometimes most off the wall ideas, things that, maybe you don't want to talk about with everybody else, but you talk about when you're together. So super excited about it. Can't encourage you enough to join us if you're thinking about it at all. And if you know somebody that might be interested in being there, and somebody who's interesting too, would be thrilled for a reference. It's going to be in New York City. So with that, today I wanted to focus on something new, a little different, something that's caught my interest that surprises me and nobody seems to talk about, and relates to some ideas that I've been working on for quite a while now. So I titled this talk, Bitcoin and Gold Better Together. So I'll show you what that means in just a minute. And of course, there's a lot of narrative right now, for good reason, around Bitcoin and gold as alternatives to the US Treasuries, right? As the debt in the United States, which we've covered extensively, reaches unfamiliar proportions, unfamiliar levels, right? There's Niall Ferguson's idea or observation that when the interest on the debt exceeds the spending on defense by empires, then that's a red flag, and the United States is there, and we all know that. We've been talking about it. Doesn't mean that, everything blows up tomorrow, but Bitcoin and gold are both getting attention, as other forms of money than the US dollar and the US financial stability is being called into question. So we'll look at the cycles, but we're also going to look at putting Bitcoin and gold together into a risk-balanced portfolio. And that is the technical term from the hedge fund world is risk parity. So we're going to be talking about that today and looking at a risk parity portfolio of Bitcoin and gold. And I think you'll find it interesting. So good to be with you. And we'll start, as always, with a quick look back at some of the things we looked at last week. And then we'll get on to the theme of today. And I think today might not be as detailed as last week's presentation. I know I laid a lot on everybody, but we were looking last time, I called it World on Tilt, TLT, looking at everything in terms of priced in 20-year treasuries, or TLT. So just a couple of charts briefly that we looked at last week and where things stand over the past week. Now, these were long-term moves that we were examining. We looked at daily and weekly data, so it's kind of meaningless to say, well, what's happened in the past week? Were you right? No. But anyway, just reviewing. It's our practice, and it's a good practice. And this was SPY, the S&P 500 ETF, divided by TLT. clearly expecting SPY to continue to gain on TLT here. Pretty clear cycle, 172. Something to keep an eye on, and good momentum, and certainly the momentum and the cycles have carried forward, and SPY has gained on TLT over the past week. We also looked at GLD divided by TLT. And we know the cycles in gold, I've covered it extensively, have been topping and are topping. And the cycles in TLT are bottoming, at least on the dailies. And when we put them together, excuse me, we get this incredible little cycle here, this 125. And if we just look at that alone, you know, we see it topping. Momentum is clearly down. So this says, you know, sell gold, buy TLT. Meanwhile, Moody's came out and gave their little opinion on Friday, and gold's gained while treasuries have fallen. We'll see. I don't personally expect it to last a long time. But that's where things have been over the past week. All right, so getting into the material for today. Now, this is a private page of my own where I look at correlations across different time frames on the assets that I trade, and I trade futures. So here's 1 hour data, and looking at just the pairwise correlation of the different assets, futures contracts, using on 1 hour data. So here's gold right here. This is the gold row if we go across. And if we look down at the bottom, here is the Bitcoin column, right? So here's Bitcoin and here's gold. And on the hourly data, they are uncorrelated. That's interesting. So then I go to some higher time frames. Let's look at the 4 hour data. Okay, and again, here's gold and here's Bitcoin. Whoa, they're uncorrelated on the 4 hour data. Now let's go up and look at the daily data. Here's the daily data. Bitcoin and gold a little bit positively correlated, 0.11, so about a 10% correlation. Still, that's not that strong. And then finally on the weekly data, actually negatively correlated, and each of these uses about 250 data periods. So that's like 5 years on the weekly data, slightly negatively correlated. So this surprises me because everybody talks about Bitcoin as digital gold, but it isn't correlated to gold on any time frame. So I thought we'd explore how to take advantage of this. Just, you know, of note, if we look at what Bitcoin is correlated to, okay, here's the Bitcoin row here on the weekly data, of course. What is it most correlated to? Equities on the weekly data. Stronger correlation to equities on the daily data. And as we go down, the 4 hour data, the correlation is crazy high. Look at that, 0.7. And if we go down to the 1 hour data, correlation's coming down a bit, 0.4, but that's still, you know, significant correlation. I even take it down to the 15 and the 5 minute data, but we're not really going there today. So the point is, Bitcoin is not correlated to gold. It's correlated to equities. And of course to Ethereum. So I thought that was interesting. And I love uncorrelated bets. We've talked about that extensively. So I'm gonna take a little deviation here over to the product I've been working on, RiskSmith. to explain a little bit what risk parity is. So I'm going to start over here and just do this from scratch so you see how this works. I'm going to add a portfolio here. I'm going to say that there's $10,000 of capital, and we're looking to hold it for 1 year, and we're going to risk $1,000 on each position because there's only going to be 2 positions in this portfolio. So create portfolio. Defaults to untitled portfolio, but we can edit that. And we'll just rename it BTC and gold. Okay. So now let's go over here and we're going to just put in a couple of entries, namely BTC equals F and GC equals F. Those are the futures contracts. Add 2 tickers. All right, so last step here to get this into our initial configuration is I'm going here to rebalance, putting in $10,000 that I want to spread across these 2 positions. And so it creates a risk parity portfolio right out of the gate. Apply. And approve. Oops, did I miss that? Okay. All right. So here we have a risk parity portfolio consisting of Bitcoin and gold, using up $10,000 of capital and taking equal risk on each position. And it's the idea is that this portfolio is to be held for 1 year. So what do we see here? I'd like to draw your attention to just a couple of things. Okay. So the position value over here in Bitcoin is $4,194. And the position value in gold is $5,805. Okay. So those add up to $10,000, but the position in Bitcoin is smaller because Bitcoin is more volatile than gold. We can see here, if you know what a histogram is, if you look at the histogram, Bitcoin has a wider distribution of returns on a daily basis than gold, which has a tighter histogram. It's less volatile. Okay. So because Bitcoin is more volatile than gold, not shockingly so, not as much as you might expect, but it is more volatile than gold. So we put less money in Bitcoin and more in gold, but our exposure on both is about the same, $860 of exposure risk. So now that is the basic idea of risk parity. Okay. So it's not that you're taking equal positions. It's not $5,000 in each investment. Nope. It's the same amount of risk, which is a different amount of capital. You have more capital in your less volatile investments and less capital in your more volatile investments. So that's the idea of risk parity. So I'm going to show you something now. What I've done here is I've made a portfolio of Bitcoin and gold. And I've gone back, in this case, about 2 years. And every quarter I rebalanced so that I went back to equal risk or risk parity between Bitcoin and gold at the end of every quarter or the beginning of every quarter. Okay. So when I do that, I'm just showing here this portfolio. This is a risk parity portfolio, rebalanced quarterly between Bitcoin and gold here. And the yellow line here is the S&P 500. So we shouldn't be surprised. No one's going to be surprised that Bitcoin plus gold in a balanced portfolio outperform the S&P 500, over the past 2 years. What's really interesting to me, though, is that not only did it crush the returns, but it did it in a more risk-efficient way, right? So the Sharpe and the Sortino are two measures of the reward that you get for the risk or volatility that you have to put up with. And so it's just very striking to me that over the past 2 years, not only has Bitcoin plus gold beat the S&P 500 considerably, 97% versus 37%, but it's done so in a more risk-efficient way. That is seriously impressive. Now, let's go back and look at what's happened over the past 5 years. So if we go back to 2020, and again, same thing, Bitcoin plus gold rebalanced quarterly. Again, no surprise, particularly over the last couple of years, Bitcoin and gold have both outperformed the S&P 500. But again, even over a 5-year period, I just want to show you here, not only did it outperform, but it did so with more risk efficiency than the S&P 500. So Bitcoin plus gold together, because they are uncorrelated and they're both going up and to the right, are like red steak and red wine. I thought that's pretty amazing. So let's look at it now versus gold. Okay, same thing, just going back 2 years. This is Bitcoin plus gold, and this is gold. So Bitcoin plus gold has outperformed gold over the past 2 years. And again, done it with better risk efficiency, 2.12 Sharpe versus 1.74 Sharpe, and 3.08 Sortino versus 2.31 Sortino. So again, better returns and more risk efficiency over a 2-year period. We look back over a 5-year period, also better returns. Of course, Bitcoin went crazy back here in 2020. Really maintained those gains. But again, did it with better risk efficiency, 1.03 versus 0.5 and 1.52 over versus 0.66. So great performance. And lastly, looking at the same Bitcoin plus gold versus Bitcoin itself. Okay. No surprise, Bitcoin is outperformed on a gain basis. But again, even though Bitcoin outperformed on just a pure gain basis, the combined Bitcoin and gold portfolio outperformed on a risk reward basis, right? So reward risk, I should say. Higher Sharpe 2.12 versus 1.6 and 3.0 Sortino versus 2.6. Even Bitcoin alone, 1.6 and 2.6, these are great Sharpes and Sortinos, but Bitcoin plus gold over the past 2 years is even better. And finally, over the 5 years, also the portfolio, Bitcoin plus gold, outperformed in terms of reward versus risk. So just summing up here, and then we'll go back and look at some cycles. So Bitcoin as digital gold, I'm not seeing it because it's not acting like gold, right? I mean, I guess they're both acting the same and that they're both going up right now. But it's just fascinating to me that at least on a daily basis, I mean, really on all the time frames we've looked at, that I look at, Bitcoin and gold are uncorrelated. They're not moving up and down at the same time. So that's worth noting. Then the other thing is they go great together. I hear sometimes people saying, well, should I be in Bitcoin? Should I be on gold? A risk parity portfolio of Bitcoin and gold together if you're interested in those, alternative currencies to the US dollar, which may be losing some confidence in the US dollar because of the excessive debt in the United States. Very logical thesis shared by many very smart people. Bitcoin and gold go well together. So that's what I wanted to highlight, and hope everybody's tracking there. And let's go back now and wrap up just by looking at some cycles. All right. So here, just looking at the daily data. Let me start over here. This is the daily data on Bitcoin using the futures BTC equals F from Yahoo Finance. And if we look at these cycles, it's there's a lot of clear cycles on the spectrum. The Bartels aren't fantastic, but there's definitely some clear cycles, including this 239, which started out performing well, but Bitcoin is back at recent highs right now, maybe even close to all-time highs right now. So, but if we look at let's just kind of add the other cycles in, number 1, 2, and 3. We can see a little bit of possible upside left, but overall, the daily data on the Bitcoin cycles are pointing are more down than up. Okay, and we know if we look at the cycles in gold, they're almost all down right now. And I've added in 1, 2, 3, and 4 here, and the momentum is down considerably as well. Meanwhile, gold is still holding up pretty well, you must say. But the cycles are suggesting that there's more downside risk than upside risk. Let's just put it that way. And then finally, I've made this combined portfolio of Bitcoin plus gold here, again, rebalanced quarterly. And we're not going to be shocked to see that, well, what I am interested in is a couple of things here. One is there's a very clear cycle here at 243 days. These are trading days, so that's roughly a year of trading days. We saw that the daily cycles in Bitcoin were suggesting lower, and the daily cycles in gold suggesting topping. So we are not surprised to see that Bitcoin plus gold is also showing cycles topping. So this is the daily cycle, and we've got a clear signal at 243, and another one right here at 131, which is also quite clear. So again, I do think that the risk in Bitcoin and gold is more to the downside right now than to the upside. But unless there is some kind of crisis that truly gets going, as opposed to the extreme narratives that we're seeing out there for the most part right now. So that was interesting. Again, though, I think Bitcoin and gold together are better than Bitcoin and gold alone. And the cycles on both on the daily data we know are showing topping signals, are showing, well, Bitcoin is actually showing some upward momentum at the moment, and gold some downward momentum. We have looked at Bitcoin versus gold, and Bitcoin seems to have an edge over gold right now, at least in terms of cycles. But when you add them together, the cycles are clear and they are topping. Okay. I also made some effort to try to do this on weekly data. Of course, Bitcoin doesn't go back that far. We're able to take it back to about 2015 and also suggest from the weekly cycles that the risk is to the downside versus the upside right now. So that is really it, what I had to share with you today. Bitcoin plus gold. Bitcoin and gold are uncorrelated. And they're both in the conversation about alternatives to the US dollar. So if you're going to pursue that thesis and that bet or that hedge, try Bitcoin and gold together. But know that the daily cycles and the weekly cycles are showing significant downside risk. That's really what I got for you today. So let me see what's on your mind, if anything. Northern VA, I'm in Southern VA. That is a crime, wearing the same color tie as shirt. Well, thank you, Allied Master Computer. I wasn't intending to be criminal, but I kind of liked it myself. I like that my tie has stimulated conversation in the group here. I wish you had updated the RiskSmith webinar a few months back where you constructed a risk return optimized example portfolio. It was very interesting. Thank you, Nikolaus. I do continue to work on it. It is a labor of love. It's come a long way. And I would like to go more into depth in it in the coming weeks because I'm pretty comfortable with where it's at now. I would have guessed that BTC is much more volatile, so I guess it depends on over what time you measure volatility. Yeah, Bitcoin has been surprisingly not as volatile as most people think over the past couple of years. It is still pretty volatile, but yeah, less than you think. Been holding total and gold for 2 years. Noticing this morning how well these had done versus stocks. Interesting to rebalance quarterly. Yeah, I really, again, the main thing here is Bitcoin and gold are uncorrelated on almost all time frames. And I just don't think people realize that or talk about it much. And I wanted to bring it to your attention because I think they go well together. Until August, gold long and S&P 500 short. I am not seeing that, Dogan. The cycles at least are saying long gold, long S&P 500, short gold. But that's what the cycles say. And this is Cycles TV. Isn't Lars's dominant 200-day cycle still up until July/August? So go back and watch some of Lars's shows on Bitcoin. I think his most recent one was a couple months ago. I wouldn't be surprised to see Lars do an update on that in the next couple of weeks, but I think we're getting close to the top that he was anticipating from that 200-day nominal cycle. So that's a unique analysis that he has put together that draws on more than just the dynamic cycles. And so you need to go back and watch his presentations, his most recent presentation on that in the past few months to get to see his analysis of that. So I can't reproduce it. So all right. So yeah, I really am interested in correlation, as are most professionals. And it is something that I think people should be paying more attention to. I use it in my own trading. It's like, oh, well, if things that are correlated are going up, and then I see something that is also correlated to those things, but it's not going up yet, but my technical analysis and cycles suggest it should go up, that's just another indication to me that, well, its peers are going up. Its technical analysis and cycles suggest it should go up. A little more confidence in that bet. So that's one way I use it. And then, of course, I use it to build holy grail portfolios, uncorrelated bets. I think Bitcoin plus gold is a smoother ride than Bitcoin and gold alone, a better reward to risk opportunity. So that's how it's been for years and continues to be the case. So any thoughts on long dated JGBs? Roan, do you have a ticker on that? So I'm not sure. I'm not sure, but I'm interested. And maybe we can look at that next week. All right, I'm going to leave it there for today, gang. Appreciate you tuning in. If you're serious about cycles, come to our conference in New York City. We're nearly filled up. We top out at 100, but it's going to be an incredible event. I'm spending more and more time on it, and I promise you it's going to be utterly unique, and you're going to have to be there in person to really get the full experience. So hope to see you there. And one way or another, I'll see you again soon on Cycles TV. Have a great week.